Would you like to learn how to use a very low-risk directional trade setup? Hi, I'm Larry Gaines, Power Cycle Trading. In this video, I'm going to show you a very high-reward, low-risk option trading strategy utilizing what we call the wide-wing butterfly. So, on the 19th, we were talking about in my last video that this was a key support level, this 270 level, and we got a breakdown yesterday, Wednesday after the FOMC meeting, pushing down towards that 270. So you can see then today it broke below there, and right now, as long as it stays below these moving averages and can't get back above these clusters of moving averages up here, there's a good high probability that the market will eventually retest these lows down here, which came on the 9th of February. So the first big target will be actually this 200-day moving average right here, 258, and then down to this kind of zone 255, 253. So we could target a trade down to 255 using what we call a wide wing butterfly, and do it with very, very little risk. But if you get the directional trade right, it can have a very high payoff. So let's take a look. So this is a wide wing butterfly, $5 wide. So in this example, I'm showing you an April 6 option series. And so you'd buy the 260 put, sell the 255, then sell the 255 put again, buy the 250. So this is what we call a balanced butterfly using puts. And right now you can get into this for 28 cents or $28 debit. So if you got this trade totally wrong and it went straight up and never went down to your target zone or anywhere close to it, the maximum loss would be $28 per option spread. Now, if it starts moving down, let's say, for example, today, the 22nd, if it really, collapsed, which it's not going to do, but if it got down to 255, you'd be up $53, $54, so that's a 200% return. The big payoff, though, comes as you get closer to option expiration. So this is April 6 series, and let's say next week on the 30th, the market, starts to really roll over. And if it gets down to 258, you're up 40. If it gets down to 255, you're up 85. So it's still, pretty good return when you look at a potential for an $85 profit on a $28 at risk. That's a really high, what we call positive risk ratio. But if it went into an even further to the week of your option expiration, which would be the 6th of April, right here, and it got into this profit zone or profit tent, if you got to 255 on that specific time frame of April the 6th, the option expiration, going into that day, you'd be at $240. And if you got it exactly right into the close, you could be up over $440 on your risk of 29. So I hope this helps. I'll talk to you on my next video update.